Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're covering when a collaboration actually becomes a partnership, because there are distinct factors that courts will look at if the issue arises. Get all the news you need to keep your clients current, as well as new tax planning strategies to minimize taxes throughout the year at Spiedel's quarterly federal tax update webinar. Register for a year of live updates or just the upcoming session on July 26th at Spiedel.com under webinars. Taxpayers might enter into collaborations thinking that they're forming a partnership, but a partnership does not exist if certain criteria are not met. An example of this played out in a tax court case, White v. Commissioner, where the taxpayers argued they had formed a partnership with another couple, which would have meant they were only taxable on their distributive shares of the partnership's income. But the court found they had failed to treat the enterprise as a partnership in many ways, so the taxpayer was required to treat the entire activity as a sole proprietorship, meaning all the business's income was taxable on Schedule C. The taxpayers in this case were husband and wife. They had partnered with the taxpayer husband's ex-wife and her current husband to form a mortgage company. The business was run very informally. They did not consult tax professionals. They mingled personal and business bank accounts. They didn't receive consistent and equal sums of income. And two of the partners, the ex-wife and her current husband, didn't have control over business accounts. In this case, the court noted that it's acceptable for a partnership to have an oral or informal partnership agreement, but you have to follow it. The taxpayers here had a loose agreement about how they would run the business and split the profits, but for the most part, they did not adhere to that plan. There are 8 factors that the tax court considers in evaluating whether a partnership exists, known as the Luna factors after the tax court case they originated from. Those factors are the agreement of the parties and their conduct in executing its terms, the contributions, if any, which each party has made to the venture, the parties' control over income and capital and the right of each to make withdrawals, whether each party was a principal and co-proprietor sharing a mutual proprietary interest in the net profits and having an obligation to share losses, or whether one party was the agent or employee of the other, receiving for their services contingent compensation in the form of a percentage of income, whether business was conducted in the joint names of the parties, whether the parties filed federal partnership returns or otherwise represented to the IRS or to persons with whom they dealt that they were joint venturers, whether separate books of account were maintained for the venture, and whether the parties exercised mutual control over and assumed mutual responsibilities for the enterprise. In the White case, the court found that only Factor 2 regarding contributions weighed in favor of the enterprise being treated as a partnership, because while only one couple contributed money to the venture, both couples equally contributed services. Some of the factors weighing against the taxpayers included the taxpayers were the only ones with financial control. The other couple was unable to open business bank accounts because of past problems with bad checks, so they weren't listed on any of the accounts. The other couple played a role more akin to independent contractors rather than co-proprietors. And a Form 1065 was never filed, and both couples reported everything on their 1040s and Schedule C. The key question that a court will try to answer in cases like this is whether the parties intended to, and actually did, agree to carry on a business for profit. A written agreement is not required to form a partnership, but taxpayers are required to follow certain formalities. We cover topics like this in Spiedel's Federal Tax Letter, and you can get details about a subscription and a sample issue at Spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.